Good afternoon, Sage reporting live from 𝐊𝐴𝐴 studio, and it's lunchtime here in Sydney and time for the mid-market pulse. In today's show we'll take a look at the overall Australian share market's performance by the mid-session trade. And we'll also explore the biggest winners and losers of the day, such as Champion Iron, Lynas Rare Earths, Whitehaven Coal, Janus Henderson, 𝐧𝐞, APA and others. Lastly, in our final segment, we'll focus on stocks that have grabbed the headlines today, such as AusNet Services, APA Group, NIB Holdings, CIMIC and many more. So without further ado, let's get started. And the Australian shares edged higher by the afternoon, pairing their opening losses led by strong gains in the energy stocks. The market sentiment got a boost amid of the report that China's real estate giant Evergrande has reached a deal with bondholders. And Evergrande Group's main unit, Hengda Real Estate Group, has said today that it would make a bond interest payment on September 23rd. Evergrande's interest payments on two bonds worth $119.5 million are due on Thursday. And the benchmark index, the ASX 200, was trading 0.48% lower by lunch. The index opened lower for the fourth straight session today and declined as much as 0.3%, tracking the mixed cues from Wall Street. And the US stocks finished marginally lower overnight ahead of the highly anticipated Federal Reserve meeting. The Dow Jones dropped 0.15%, while the S&P 500 slipped as well 0.1%. The Nasdaq Composite ended 0.2% higher. The market witnessed cautious trading ahead of the Federal Open Market Committee policy statement, and the central bank officials will release policy statement on Wednesday, which will give more clarity as to when the central bank will start tapering its US $120 billion in monthly bond buying program. The market expects the scaling back of economic stimulus to begin in November or December. And moving on now to the sectoral front on the ASX. 6 of the 11 indices were trading in the red zone, led by financials and industrials. Financial sector was the worst performer with a 0.7% loss, followed by 0.5% falls in the industrial sector. Among others, materials, consumer staples, telecom and consumer discretionary also dropped marginally. The material and energy sectors were among the top gainers, pairing the previous session losses despite falls in commodity prices. And the price of iron ore slipped below the US $100 mark for the first time in 14 months, as worries about the anticipated default of Chinese developer Evergrande added downward pressure on the commodity. The price fell 8.8% per tonne overnight. Meanwhile, the energy sector was the biggest gainer, rising 1.4% on the overnight rise in the crude oil prices. And crude oil prices rose on Tuesday as the big oil-producing countries are struggling to produce enough supply to meet the growing demand. November delivery Brent crude oil futures traded up 0.04% per barrel, whereas November delivery WTI crude oil futures rose 0.60% a barrel. On the COVID-19 front, New South Wales reported 1,035 new locally coronavirus cases and 5 deaths in the past 24 hours, while Victoria's cases rose to 628. In our next segment, let's focus on the top gainers and losers by the mid-sessions trade. And the top gainer on the ASX pack was Australian professional services company Worley with a 4.9% gain. And some of the other notable gainers were energy stocks AGL Energy and Beach Energy, followed by iron ore explorer Champion Iron and corporate bookmaker PointsBet. On the flip side, Aussie retailer Premier Investment topped the losers chart by falling 4.7%. And some of the other worst performers were energy firm AusNet Services, gold miner Chalice Mining and mining infrastructure services for Mineral Resources. And it's time for a short break now, but please stay tuned on 𝐊𝐴𝐴 TV.
Tune in to stay updated while on the move.
We will tell you where the crypto craze has reached,
where the property market is headed next,
what the world is doing to become more environmentally friendly,
Apart from tracking the daily market charter.
Be on top of the latest news and announcements
With 𝐊𝐴𝐚 TV.
Welcome back, Sage here, live from Sydney, and let's now take a look at the stocks that grab the headlines today. And the first news comes in from Westpac, where shares were trading 0.8% lower after Australia's leading bank terminated talks to sell off its major stake in Westpac PNG. Financial services firm Kina Securities was in discussion with the lender to buy Westpac Fiji and Westpac's 89.91% shares in Westpac Bank PNG. And both the companies mutually agreed to terminate the agreement after Papua New Guinea's Independent Consumer and Competition Commission denied authorisation for Kina's proposed acquisition of Westpac PNG. The next big news comes in from the Australian stock transfer company Computershare, whose shares traded marginally higher following reports of retirement of its founder Chris Morris. The company has informed this morning that Morris will not stand for re-election at this year's annual general meeting on November the 11th and will retire as a director effective from the end of that meeting. And besides that, the company has appointed John Nendick as an independent non-executive director to its board effective from September 21st, 2021. And let's now take a look at the next. Shares of the global fund manager Janus Henderson Group dropped nearly 1% following a business update. And the company plans to launch its flagship environmental, social and governance fund to meet the growing demands for sustainable investing. The Janus Henderson Global Sustainable Equity Fund has $4.7 billion in assets and will launch on the local market as an active exchange-traded fund. The portfolio is aiming to convert the global push among businesses to decarbonise into investment returns, which has attracted added urgency following increasingly dire predictions about the climate. And next up, shares of Zip rose over 2% after the buy now pay later player announced a foray into the Indian market, and the company will enter India's market by acquiring a minority stake in Indian BNPL firm Zest Money. It will invest 69 million Australian dollars to subscribe for shares in Zest Money and has negotiated terms to increase its shareholding over time. The company believes that India has the potential to become one of the largest markets globally, and by financial year 2026 is forecast to have 300 billion US dollars in buy now pay later payment volumes. And next up, the share price of small cap fintech Doof dropped 5% after it unveiled plans to list on the OTCBQ venture market in the United States. The digital banking app has taken its decision to capitalise on increasing demand from the US-based customers and investors. And the OTCBQ venture market facilitates trading of securities which are not listed on major exchanges. It features 11,000 US and international stocks and attracts early-stage and developing tech companies wanting to build momentum in the United States. And lastly, shares of pathology operator Healius were up 0.5% after it issued an update on sale of Adora Fertility Centre to Virtues Health. The healthcare firm said that the Australian Competition and Consumer Commission's public review into the sale of its fertility treatments business is not concerning, and the company said that the completion of the sale is not conditional on any regulatory approvals, and it expects the deal to complete on time by the second quarter of financial year 2022. And last month, fellow ASX-listed firm Virtues Health entered into a share sale agreement to acquire Adora Fertility and 3-day hospitals from Healius. And thanks for joining us on that report. That's a wrap in the show. Keep watching 𝐊𝐴𝐚 TV for the trending market updates. Sage signing off.